another thing I forgot to mention on the last video was like, okay, so now I identified my entry. This is the purple line right here. This is me identifying my entry based off of me watching support and resistance for the last hour. So now if this is my entry, I got my entry wrong and then ended up dipping lower. So what I would do is I would buy in the money call right here. And then if it dips, I would buy out the money call. That way I can get in for cheaper and I could also correct my loss, my minor loss that happened between here. I could correct the minor loss. And now when it goes back up, I don't need it to start. I don't need it to break up above here to be in profit. I can get back in profit if I just wait. If I wait for the new support and I get another call right here, out the money call, hoping that it breaks out of this line. But even if it doesn't, the out the money call will be valuable once it gets to this zone up here. So like I probably would go like maybe $2 out the money and not try to go too far because we don't want to risk that much. we just want to kind of correct our bad entry. So I ride it down. I buy my in the money right here. I wait till it drops right here, and I try to find support. And then this is when I buy maybe $2 out the money from where I bought right here. So when I make it, if it keeps dropping, I'm out the trade. If it falls below this and it shows me it's not going back above this, I gotta leave the trade. I'd probably set my stop loss somewhere below this exactly where these lines already are. This would be like this would be one of my stop. This would be my stop loss. If it breaks below this, this is my stop loss. But as long as it goes back up here, I'm making money from my bad entry. So now that I'm back here at my entry, I'm in the green. So now I'm looking for new levels now, and I'm looking for my area where I'm happy to take profit. Now, this could have been an area to take profit right here. This could be a line I would draw. I draw this line right here because I know I'd be in profit. I'd be in profit from this purple to here. I'd be in profit, but I wouldn't make that much money from here. So my goal would be to ride it up here. So I know, excuse me, I'm coughing. So, so I know if I'm right here and it goes up here, I'm in the green, right? But see, my thing is I don't want to sell too soon because what if it keeps going up like it did? So what I do is I wait for it to break out of here. And now right here, it got you scared. It got you scared. But remember, we didn't lose any money yet. We're already in the green right here because we made a good entry down here. So we don't got to panic because it's pulling back. All it's doing is pulling back to break even. And as long as it doesn't break below break even, you can stay in the trade. So why would I get scared? Why would I get scared of this right here? I'm green right here. So now it never breaks back into the purple, my entry, and it just keeps going up from there. So now I set my new line at this resistance right here. Excuse me. So now as long as it doesn't break below this new resistance, I could feel safe to stay in the trade. So it did it for a second right here. And there's no reason to panic sell. There's no reason to panic. Just stay in the trade. It's you're in the zone. You're in the zone right here. As long as it stays above this, and in the worst case scenario, you break even. So there's no reason to panic. So now it's staying above this line and it broke out. This one broke out. This one fell under. This one broke out. We could stay in the trade. We could even anticipate this next move and see now this may be the spot where I want to take the profit on the in the money right here. So now it's showing some pullback. A smart person would take profit right here. But remember, I bought out the money. So now I took profit on this whole move. And now I could keep my out the money. And now since my out the money is cheaper than my in the money, why would I sell it too? I could sell it and just take all the profit, or I could let it ride a little longer and make me more money. So now I took my green. I took my green from here to here. I took my green from here to here on my in the money. And now I'm letting my out the money ride. And now my out the money is probably triple, double, triple by now. From this point to all the way up here, my out the money probably it's 200-300% now. So now, as long as it doesn't break below this line, why would I sell the out the money? Why would I sell it? It's not breaking below the new the old resistance is now the new support, and it's actually a little higher, and that's why I put this line up here. So now my out the money is green, but why am I panicking? It's not falling below this new line. So this would really be my stop loss. So if it was to fall below this line and it starts falling below this line, it's time to take my profits on the out the money. But right now, I could let this out the money ride for the rest of the day. As long as it doesn't drop below this blue, as long as it doesn't drop below this line, I don't have to be scared, and I can stay in the trade for as long as I want. And yeah, that's how I've been going about doing my stop losses. And I think this is a good strategy. Look, it's starting to break below it. See, you may want to just take your money. Well, it's below 592 now. So for a moment here, this 592 might have been worth some, but now the value of that contract is probably dropping. But as long as we stay above this, we can probably stay in that out the money.